Hello, good day. So, our lesson for today is Sales Journal as one of the required books by the BIR because usually for a small time businesses, BIR would require cash receipts journal, cash disbursement journal, sales journal, and purchase journal. And in some cases, they would also have you the general ledger and the general journal. So we have now the sales journal as one of the specialized journal. Already finished purchase journal. So what is a sales journal? Sales journal is a specialized accounting journal used to keep track of sales items that customer have purchased on account. So take note, sales journal only include those purchases that are on account. That's why in some cases the BIR won't ask you to have sales journal if you are a sari-sari store or a small time business owner. So every transaction that is entered in this is essentially result in the debit to accounts receivable and a credit to sales accounts. That's the normal, but take note there are some sales that are also on account but not really sales of the merchandise. It could be sales of scrap value or your old fixtures and furnitures, okay? So this is how it look like. Although you could customize the columns. That's why if you would see, BAR would usually give you the columnar, wherein you could now use to to depict what columns you wanted. So this is the usual. So you have the date. So the date is the column used to track the date on which the sales is made. You also have the customer name to determine to whom you made the sales. Then you have the sales slip or sales invoice or charge invoice. So these are the column used to enter the number so that you would have the reference on the different sales that you made over your invoices. Next, you have in some book it's post reference, in some book it's called folio. So what is post reference or folio? It's the entries in sales journal are posted on a daily basis. So normally, you could also check this on the ledger or subsidiary ledger. So that's what you put on the folio. Then you have the term, if you grant a discount on a certain period, just like in our purchase journal, we put N, so, or 1, over 30 days or 20 days. So the numerator usually serve as the discount and the denominator usually the number of days where you could avail the discount. Then you have your accounts receivable, debit, because as we said, this account usually have a debit balance of accounts receivable. Sorry, the ES has been going down, but it's receivables. And then you also have the sales tax payable. Usually, these are for the vatable businesses because if you are a vatable businesses, your sales compose of the actual sales and the VAT, which is normally payable to BIR. Okay, so when you go to Jollibee, you would see the invoice would have sales and then VAT. So that's what we put on our sales tax payable, or this is also our output tax because it's output because you sell it. And then our sales. Then other account credited, these are the account other than sales. If you sold other items other than your merchandise, okay? Okay. So so let's now go to our sample transactions that we are supposed to record this in our sales journal. So we have on January 16 sold merchandise on account to Jane Company, sales invoice number 142, and then the amount is 13,742. So we have the term, the numerator, as we said, discount. So Jane will be given discount if she paid within 10 days. So 1% discount when she pay in 10 days. Then after 10 days, no more discount. That's why it's N, no discount at 30 days. So the term for the payment is usually 30 days. Next we have on January 20, sales on account to Adolfo Corporation with the sales invoice number 143. So we have 18,950. And then we already discussed the term. And then we also have January 25 sold merchandise on account to Igna Company, sales invoice number 144 at the amount of 11,173. Okay? And then on January 30, sold an old computer on credit to Melba Co-op for 5,000, invoice number 146. So what is an invoice? Usually, invoice is used by the seller to the buyer as a written evidence on sale of goods or property in an ordinary course of business, whether cash or on account. So, usually, these are also your evidence of ownership. Because when the sales invoice has been given to you, it's as if a contract of transfer of ownership that you are now the legal owner of this particular property. Okay, so how do it look like? It look like this. You have the sales invoice, the name of your company, the address, the telephone number, and then you have the TIN number. If it's NB, it's non-VAT. If it's VAT, it's vatable sales. So if it's NB, meaning the sales are normally just sales, no additional taxes. Okay? So name to whom we sold the particular product, so it's Jane Company. Then the date when we sold it, and then the address of Jane so that you could locate, and then the term given to Jane. Normally, you would ask her to receive the goods in good condition, so to sign. Okay? And in some cases, there is also the ATP, the number of and the printer of this particular invoice. Okay? So, let's now entry. So remember, we have on January 16, 2020, Jane Company bought to KKR Company with an invoice number 142, term 1% discount on 10 days at the amount of 13,742,000. So take note for this one, this is a non-VAT sales. So you have now the same as the sales. It also follow with Adulfo, you also have the same sales. For Igna, same, no term because, and for Melba Corp, it's not a sales, remember? Because what you sold is your old computer. Okay? So sales are usually your particular or your merchandise or your trading or what you manufactured if you are a manufacturing entity. But any equipment other than this inventory is not credited to sale, instead to that account, so that you will be able to capture that it is already eliminated as your asset because you already make that particular asset as a money. Just like what happened when KKR sold the old computer to Melba. So, if you would check on their account, they have no more computer. Okay, so you had to eliminate the computer. So, let's see, where do we get that? So, we have now the invoice number. So, 142, it's 0142. We eliminated the zeros. Then, we have the date. Then, the name. Customer name is also the name. Then, we have the term. Then, the amounts. Okay? So, in some cases, you could also include particulars as your column so that you will be able to determine what particular items you will be able to sold. Because in some cases, especially to online seller, they have a lot of items so that it would be easier for them to check on their inventories. Okay? So, let's now put it on our general ledger. So, take note, remember in our purchases, we have two kinds of ledger. We still have the general ledger, that is umbrella account. Then, it also have the subsidiary ledger. Okay? So, for this account, we put accounts receivable. We just put is a January sale. But you also have the option to put it, to entry it day by day. Okay? Although in some activities, so that if it's only one account and then all the details were already in your sales journal, then you could put it as one line item for per month. So easier for you. Okay? And so with the sales, since just one line item. Then for the computer, since it's a different sale of old computer. But take note, I wasn't able to put this one. It would be a negative balance. But if it's a real business, you will be able to see that this computer has the beginning balance of also sale old computer. So when you eliminate this computer, usually you also have, if it has the accumulated depreciation, you also eliminate that because this accumulated depreciation are accessory account to your computer. Okay? So this is what we now put on our folio, or in some cases, the post reference. Because where do we post the items? Here. Okay? So we have now subsidiary ledger. So to whom we sold the items. So we sold one to Jane, 13,074, and then to Adolfo, 18,000, and then to Igna company. So these are our accounts receivable, including Melba, because we sold and Melba didn't pay. So if you would be able to add, to sum it all, it would be the same as our accounts receivable. Okay? So what if it's a buttable sale? So a buttable sale would look like this. You have to put on the total, VAT inclusive, and then you also have to put what is the amount for the VAT and the net amount for the actual goods. Okay? So what is a VAT? Value added tax. Value added tax is a consumption tax placed on the product whenever value is added at each stage of the supply chain for production to the point of sale. Okay? So since when you buy goods, it's also have, usually it's also VATable goods. So you could have the options to add your own VAT. Because VAT sales or VATable VAT tax are indirect tax, meaning you could pass it on. So every time you bought, you could pass it on to your buyers. Okay? So that's why VAT usually end up to those who has not. No, it's not. Number one, if it's you're not non-VATable, then you have to shoulder for VAT. And if you are the end user of the product, because you cannot pass it on to the other people. Okay? So let's see if it's the VAT. So same for our sales invoice. We already checked on the number. The date will also be the same. Then you also have the name of the entity you or the buyer. And then the term. And then now for the amount, take note that our accounts receivable is still the total amount. Because our consumer or our buyer, what they buy include the goods that we sold and the tax we impose on that particular good. So that's why the account receivable is still the total amount. Then you have now your sales and then the tax payable. Okay, so this is what for the government. Or if we have input tax, we could deduct that as our input tax, and then the other one would now be output tax. So what is now sales return and allowance? So what if you found some goods that are damaged, you had to return it to our supplier, and so with our customer. If they find it to promote a goodwill so that customer would have a good relationship with us, we also have to put some return and allowance. And furthermore, our DTI does not permit no return, no exchange. Although nowadays, during the pandemic, it is allowed to prevent what? To prevent contaminations of other people. But if it's the normal business activity, the no return, no exchange policy is not allowed here, especially here in the Philippines. Okay? So, it's a journal where the contra revenue account, and usually this is deducted to sales. From sales is recorded. So, it's a sales adjustment an account that represent merchandise return from customer and deduction to the original selling price when the customer accept defective product. But take note, list discount and sales return and allowance or sales discount is difference. List discount is when we go to malls and then you see 50% off. So these are list discount. So these are not cash discount or sales discount or sales return or allowances, okay? Because these are their promotions, okay? Next, you also use credit memo. Why credit memo? Not debit memo, because you are informing them to what? To credit your accounts receivable to them. So, since the normal balance of accounts receivable is debit, and you are giving them credit memo, you're telling them na, hey, my accounts receivable should be deducted by this amount. That's why it was called credit memo. Okay? So, sample transaction. On January 27, Adolf returned 950 merchandise relating to sales invoice number 143, and KKR issue a credit memo 001. So, how does it look like? So, here's our sales return journal or sales return and allowance journal. We still have the date, the customer. So, we have now our credit memo. So, credit memo looks like this. Credit memo. Then, you also have the number, the name to whom, what? The name you whom returning the sales or the customers granted a credit or an a deduction from its accounts receivable, then the date, then the address, the term, and then the quantity, the particulars, the unit price, and then the price. Okay. Okay. So for our sales journal, we have this. So we have now our credit memo, and then the number, then the dates, then the name, and then the amount that we have to credit for our account receivable. So here's our ledger. If you would see, we still have to post all the accounts. Here it is. And then we post our return for our sales or subsidiary ledger to Adolfo, so that we know it's for Adolfo. So Adolfo's liability to us is only 18,000, or our accounts receivable to Adolfo is only 18,000. So the accounts receivable is less than by 950, and then our return allowance less also by 950. Okay, so thank you. Hope you like this video, and help me reach out more people by hitting the subscribe and like button below. God bless you.